If anyone has started investing this year, then you're probably thinking,
this investing thing really does suck, and I've definitely been lied to. There's no way this can actually make me wealthy.
And it's kind of true. The stock market has absolutely sucked this year. We're only 3 months in and it's already looking pretty bleak. If we look at the S&P 500 year to date, we can see that it's down by 12.35%. And the same story is seen across many different indexes. The QQQ year to date is down by nearly 20%, and the VWRL, which is Vanguard's global tracker, is down by nearly 9%. So it's just not looking that great. And this picture extends to individual stocks as well. If we take a look at Apple here year to date, the stock is down by 15%. And again, with Tesla down by a really big, nearly 34%. You get the picture. We just seem to keep declining day on day, and I know right now it's not very fun for me to check my portfolio. It's actually kind of scary. I just keep losing money. I'm sure that's the same for most of you guys out there as well. If you're someone who hasn't yet started investing, but you really thought 2022 would be your year, the year that you got into the stock market, and then you've seen everything that has already happened this year, and if you're in the UK, you've probably also had some nice notifications from your gas and electricity provider telling you that they are putting your prices up by 2 million %. Oh, and the threat of a recession. You've probably just instead decided to sit on your sofa in your pajamas eating chocolate. Fair enough. Speaking of a potential recession, is a recession coming? People are concerned about an upcoming recession, and this may even put some people off investing altogether. And there are a few different ways that people try to predict whether a recession is coming. We can look at GDP, employment rate, oil prices, inflation, and so on. You can also look at bond and gilt yields. And just to clarify, a recession is when there is a large decline in economic activity that lasts more than a few months. Production, trade, income, and spending all fall. One way to see this is to look at the GDP of a particular country. GDP stands for Gross Domestic Product, and it's a measure of the financial value of production and services that a particular country produces within a particular time period. Put simply, it tells you the health of a country financially. For a recession to actually be taking place, the GDP needs to be dropping for 2 consecutive quarters. This has not yet happened in the UK, and actually in January 2022, the GDP increased by 0.8%. So this could indicate that a recession is actually not coming. Employment rate can also be used as a recession indicator. The SARM rule is a relatively new recession indicator, and I've got here that it predicts the start of a recession when the 3-month moving average of the national unemployment rate rises by 0.5% or more relative to its low during the previous 12-month period. In the US right now, this is okay, and the SARM rule is actually not indicating a recession. If we take a look here, we can see that whenever the indicator has risen by at least 0.5%, it tends to be followed by a recession. But right now, we are not really seeing that same pattern. Back in 2020, we did see that when it went right up really high, and then we had a little bit of a recession. But right now, we're not really seeing that indicated at all. And in the UK right now, this indicator, this employment indicator, seems to be pointing towards no recession. The unemployment rate has actually gone down and the employment rate has actually gone up. Typically, when oil prices surge, an economic downfall quickly follows. You've only got to go and fill up your car right now and you'll notice this for yourself. And the fact that oil prices are increasing could indicate that a recession is coming. All of these indicators are interesting and they could give you an idea about whether a recession is coming or not. But it really depends which one you look at. Some tell you that one is coming, some tell you that one is not coming. But even if a recession does happen, should it stop you from investing? Would it mean that the stock market would completely plummet and never rebound? So with all that said, here's a few points as to why 2022 is not an awful year to invest. The first point is that we were all feeling exactly the same way back in 2020. And I'm sure investors were really fearful during the dot-com crash or during the last recession. But the market tends to rebound and the market tends to go up after it's gone down. And that's exactly what we've seen throughout history. It's just harder to see that when you're actually in the middle of it rather than when you're looking back at it. Point number 2, even if a recession was to happen, then actually investing just before it does or in those very early stages of a recession can actually lead you to getting some really great prices as stock prices fall. But of course, it's all dependent on your situation. If you've lost your job during a recession, then getting some great stock prices isn't really going to be a priority. I think my point here is just to say that even if the worst happens, so even if a recession does happen, you could actually use it to your advantage. Keep dollar cost averaging in, pound cost averaging in, and in time, the stock market tends to rebound. The third point is that even if a recession does happen, then what you can do is just adapt your investment strategy slightly and actually use it to your advantage. During an economic crisis, there may be particular types of investments that you actually want to avoid and instead put your money into some of these more recession-proof companies or even just the stock market in general, like an S&P 500 index tracker. This is actually something that Warren Buffett's doing right now, and his company Berkshire Hathaway is actually doing pretty good right now considering the rest of the stock market is not doing so great. If you're particularly worried, you could look at putting more of your money into companies that are really established and have really good financial positions rather than ones that are a little bit more volatile. Perhaps avoid some of the newer companies, just so you know your money is safe and the companies that you're investing in are recession proof. And I guess you've got to decide not only your risk tolerance, but also how long you are in this for. If you've got years and years for the market to rebound, then that's fantastic because it may take that long. But if you're perhaps later on in your investment journey and you want to retire in 1 year, you may actually look to move some of your money away from the stock market and into perhaps some safer options. But of course, it's completely dependent on your personal situation, and I am by no means a financial advisor. The fourth point as to why 2022 would actually be a good year and not such an awful year to invest is that any time that you start investing is a good time to start investing. It's that good old saying of time in the market is better than timing the market. And the final point is that no one can predict the future. So no one can say with certainty what is absolutely going to happen. 2022 may end up being the best year to start investing. It could just happen that 2022 is really bad, but those who get in during that year then go on to see really good gains in 2023. There's just no real way of knowing. You could try to invest in some commodities like gold, or you could just keep doing what you're doing. Just keep investing and don't let fear change your plan. Millions of people have left their jobs recently, and this has been termed the Great Resignation. I, however, am not one of those, and I've actually gone back to employment after a whole 7 months off. In this video here, I talk about how this decision will affect my investment strategy going forward.